Okay, good morning, good morning. Long time no hear. Okay, I have unmuted everybody and just wanted to say good morning, everybody. I'm glad you could make it. Thank you for taking time out. I think you're going to enjoy the presentation today. I thought I had a poll created here, but let me just ask a question real quick of everybody before we get started. If you would, go over into the chat box down in the bottom right-hand corner of your screen and type in the chat. How many of you have a self-directed IRA? Go ahead and just put it in the chat box. We'll see how many have a self-directed IRA. Okay, yes, no. Okay. How many have actually bought and sold a house in your IRA? Bought and sold a house in your IRA. Okay, 1 second here. Lost my presentation. Okay, not yet, not me. Okay, all right. For those that have an IRA, has anybody done any kind of lending through their self-directed IRA? Last question.
I have.
Yes. Okay. Cool. Cool. It's pretty cool, isn't it? Be able to lend and have all the profit coming back into your self-directed IRA tax-free. That's pretty cool. So we're going to talk about some of that stuff. I've got some pretty cool stories that I may interject with Kent later on some of the stuff I've done in my IRAs. But it's pretty cool. You're going to hear, it's going to open up your eyes in a lot of different ways and get you really excited. So I'm glad you could all take the time or make the time to come today. So I want to go ahead and share my screen and get this event started this morning. Okay, for those of you that just joined us, thank you for joining. This is the West DFW REI group based out of Fort Worth. Right now we're based virtually, I guess, as everybody is attending these events online. And I hope you grab your coffee and your drink, breakfast, whatever it is, and get comfortable and get ready to get started here and get excited over today's event. Couple of meeting notes here for you. A couple rules in particular with virtual meetings. If some of you are not familiar with attending these meetings, there's a couple things that'll help us in the call. Please be courteous and don't talk over others. With a virtual meeting, sometimes there's a lag in the internet connection and stuff. So try not to talk over one another and let's let one person speak at a time. Please mute yourself if you're not speaking to minimize background noise. So if you got a dog barking and maybe your wife or husband's chewing you out, want you to do something or something like that, you know, then just put it on mute so that the rest of us don't enjoy that as well. Please type your questions clearly in the chat box, and we'll do our best to answer them all. As an example, in that chat box, just to help us identify that you have a question, put question, how do I do whatever it is. So that'll just help us spot it that you've entered a question, and be able to hopefully spot that and be able to respond to you at the appropriate time. We do want to answer all your questions today if possible. Or you can raise your hand. There's a button there that you can raise your hand, and we'll see that, and then we'll let you speak at the appropriate time. So thank you very much for that. So a couple housekeeping notes. For the best quality audio and video, we recommend you turn off any kind of unnecessary programs in the background, especially if you have a weak Wi-Fi signal. It's best to turn off all that stuff, any kind of virus scans and email, any kind of graphics program. Skype is a big memory hog and bandwidth hog, so just turn those things off if you can. And that'll reduce the computer processor needs on your computer. If possible, wear a headset, especially if you are getting any kind of noise and reverb problems. The technology has gotten a lot better, so you don't have that problem most of the time, but if you can wear a headset, it may help you. These calls will be recorded and available in the members area of the West DFW REI Group members area within a couple of days. So it's not instant. It does take a little time if we have to do any editing on them. So give us time, but then you can go log in and look at your past member meeting files, and you will see it all in there. If you have any kind of quality issues with the video today, please turn off your video as a first step to see if that solves your problem. Video's a big bandwidth hog and computer processing hog in your system. So if you're having any kind of buffering or freezing up, turn your video off as a way to try and solve the problem, okay? And worst case, if you happen to actually lose the connection, you can click right back on the same Zoom link that you did to get in this call and just log back in and rejoin us, okay? We'll still be here waiting for you, all right? Okay, for those of you that are new to the group, the West DFW is a group of like-minded people where we network, brainstorm, joint venture, partner, motivate, and help each other do more deals. That's what it's all about. We want it to be a win-win for everybody, and that's what we've been doing for the last 10.5 years. Okay, so come network, learn, and do more deals at the West DFW REI Group. Okay, for sponsors, we have trusted sponsors in the group, and these are people that naturally you can trust, but these are people that the group has been trusting for many years, and these sponsors have been with us for a long time. These people are people that you could send your grandmother to and not have to worry about whether or not they're going to get ripped off here. So let's kind of go around the room for those that are here. I know Ryan's here. Ryan, you want to go ahead and introduce yourself, please?
Yeah, sure. I'm with Longhorn Investment. We're a private money lender, hard money lender. We offer money based on the hard asset. We do still need our borrowers to have some minimum requirements, which is a 650 credit score and at least $15,000 in cash reserves. But after that, we don't require down payments on our loans. So we will cover 100% of the purchase and rehab, up to 70% of the ARV. And typically, just because the first question most people ask is, well, how much do I actually have to bring to close? For a loan of about $150,000, that's for purchase and rehab, you'll probably bring somewhere around $7,000 to $8,000 cash to close.
Cool. Does an 850 credit score change the lending criteria at all?
Unfortunately, it doesn't. Those are just minimum requirements we have, because other than that, we're basing it off of the hard asset, which is the property itself and the deal that you have.
Yep.
So we sometimes are able to do some adjustments based on the deal and how good the deal is for you. But really, honestly, the person doesn't matter as much as the asset.
Yeah. No, I figured that. So cool.
Still
So
worth asking.
all of the sponsors' contact information is over on the webpage under sponsors, and you'll see Ryan's phone number, his email, their website, all that information will be there, and the same with all these other sponsors. So Ryan, you're welcome to give out your number if you'd like, but
Sure.
I just want to make sure everybody knows it's on the webpage too in the sponsor.
You guys can just contact me directly through the chat, but I will put my phone number out there. And if you guys have any questions, let me know. Or if you just want a term sheet to see specifically what will your deal look like, we do provide estimated term sheets so you can kind of have an idea of what it's going to look like before you close.
Cool. Thank you, Ryan.
Yeah, no problem.
Welcome to the call. Okay, who's next? What other sponsors we have on the call today?
When Jan deal with disappointing that goes based at the end of the
Okay, what other sponsors do we have on the call? Okay, so just
This is Ruth Ann. I'm here.
Oh, there you are, Ruth Ann. Good morning.
Good morning.
Welcome.
Thank you. You want me to go ahead?
Yes, please.
Okay. So for the rest of you, I am a traditional lender in most sense of the words because I do provide normal Fannie, Freddie government loans, but I also do a lot of down payment assistance for your buyers. And I also analyze their credit for you and tell you whether they're ready now, could be ready in 3 months, could be ready in 6 months, that kind of thing. So you know whether they're a commission for you or a sale for you this year or maybe next spring. We also have a sister bank who does a lot of non-traditional loans. We've had people with no income to prove and they've gotten 100% financing on a house. We have a bank statement program through that bank where they look at your deposits instead of what the buyer tells Uncle Sam. And they also do land loans, which most traditional lenders do not do, just raw land. So again, traditional lender in many ways, but oh, and we are in the top 5 lenders in the Metroplex. You may not have heard from us because we're not a Chase or Wells, but we are a Fannie and Fannie Mae and Freddie Mac direct lender, which means when Wells and Chase are too scared to buy any loans or don't have the money for it, we can still do those loans, do them down to 580 credit score and sell them direct.
Cool. And for everybody on the call, Ruth Ann has been with us a very long time and has helped a tremendous amount of members refinance, do creative deals, and then refinance and pull their cash back out of deals. So, and of course, the one thing that I always talk about for Ruth Ann is all the grant money that she has available. So if you are doing fix and flips in particular, she's got some grant money programs that you might want to sit down and talk to her about to help you sell your homes quicker and help the buyers and stuff. So awesome stuff, right, Ruth Ann?
Right. Keeps me busy, that's for sure.
Yeah.
I've never been so busy right now during these times. Everybody thinks times are tough and you know, financing anything. Not the case.
Cool. Well, that's good news. Okay, who's next? Do we have any other sponsors on the call? I think I saw Robin in there.
You did.
Are you with us, Robin?
Can you hear me?
I can.
Can you hear?
There you go.
Okay, sorry. And I apologize for the tardiness. For some reason, I had not gotten the link to sign on, and it kept asking me to register. So I finally got through, obviously.
Well, you're sitting on the beach, no wonder.
Pardon? Yeah,
You're on the beach.
that's where I want to be. That's why it's there. Well, I'm with Bearcat Capital, and we buy and sell real estate notes, owner finance notes, particularly that maybe you've inherited or you created and you want to get cash now versus waiting the 10, 15, 20, 30 years for it. And then we'll sell, we'll turn around and sell. A lot of times we'll sell a partial, meaning we'll sell off the next 5 or 10 years of that note if you're looking for some cash flow. So anyway, when it comes to real estate notes, I'm here to give you some information, help you create a good note that if you ever do need to sell it, then just give me a call, and I appreciate your time.
Thank you, Robin. Welcome to the call today.
Thank you.
So again, do we have any other sponsors on the call? I don't see anybody else in the list. Pamela's or anybody else?
No, there's not any other sponsors on the call.
Okay. So I'm going to well, I guess I can skim through it real quick. August REI is a third-party servicing company. They handle all your owner finance notes. So if you have bought a house creatively or bought it with owner financing and then sold it on owner financing, they will service the note for you. They'll collect the payment, make the payment to the underlying mortgage, and pay you the difference. They will also handle reporting to the credit bureaus to improve the credit scores for your buyers. They will also do the end of the year tax report and interest statement, and they will also do the first letter of default that goes out if your buyer is in default. So very valuable service. They just paid off, one of my owner finance buyers just paid off their note through August REI this last week. So that was actually a good thing because they paid it off like 2 years early. So I was real happy with that, especially in today's times, right? So anyhow, that's August REI. Again, all these sponsors are on the sponsors page of the group website, okay? So AOS Air is our heat and air conditioning sponsor. They will give you free estimates on servicing as well as complete system installation. Highly recommend that you call John and let them come out and give you estimates. Keep in mind that, you know, the end of the year, I believe it is, the new systems come into play. The old Freon stuff is going away, which means you need to keep that in mind for all your rehabs on AC units. I just bought a house down in Granbury, and we're putting a new system in there because it doesn't make any sense to be repairing it because the Freon situation, the new system's coming into play. I'm pretty sure it's the 1st of January. So, and you can use that to your benefit when you start making the offers on your houses about having to install new systems in them. So give John a call. Very, very friendly, very personable, very professional. He provides a heat and air conditioning inspection result like I've never seen, detailed reports and stuff. And he's very reasonable on his service fees. So give them a call. Robin, we already spoke to you. Dave Burdick with Burdick Insurance. Are you on the call, Dave? I didn't see you. Burdick Insurance has been around a long time, and you've probably heard this before. Not all title companies are created equal. Well, not all insurance companies are created equal either, and they won't all do investor type deals. So Dave Burdick he'll give you free quotes, and he will give you the insurance coverage and the recommendations that you really need to have on the home to be protected. They will do vacant properties. They will do your subject to and owner finance wrap notes. They will do those. Not all insurance companies will. So be sure and reach out to Dave Burdick with Burdick Insurance. He is, I believe, also going to be at my subject to workshop coming up on 8 August. So I highly recommend that you attend that and hear what Dave has to say about properly insuring your properties when you're doing sub-twos. Hudgens Contractors is our roofing contractor of choice. They've been with us a long time. They have done several of my properties re-roofing, and they will give you free estimates. They will come out and get the job done for you. They've been around a long time, and they will do whatever it takes to get your business and help you be successful and make the numbers work with you if the numbers are tight. So give Dusty a call and let them reach out and help you. Okay, Sanchez Foundation Repair. This is our foundation company. They also do several other things too, but give Bethany a call and let her come out and give you estimates on their on the foundation and getting it fixed. They do pier and beam, they do slab, so they will give you those free estimates. Make sure, and this goes for all the sponsors, make sure that you tell them that you're a member of the West DFW REI group to get the best pricing with them. Don't forget that, very important part. They need to know where you're coming from. Okay, Ruth Ann, we already covered you. Okay, Oscar with Texas Bank Mortgage. Texas Bank Mortgage is the sponsor of our meeting location when we do physical meetings. We did reach out to them the other day. They are not back open for business. That's one of the reasons why we have not started doing physical meetings again, besides some of the obvious reasons. But they are supposed to be readdressing the issue with management on when they might open back up again, starting on the 1st of September. That's not when they're opening up. That's when they're going to readdress the issue. And of course, a lot of that will be dependent on what the state is doing and what COVID-19 is doing. So, but they are a great sponsor of ours. They provide breakfast for us, and they provide a great meeting location. So, okay, Simplified Title just closed a deal with Martin last week. They are our title company sponsor. Again, you heard me say earlier, not all title companies are created equal, and you definitely need to be careful on who you're going to for your investment type deals. Some of the basic deals the title companies will do, but when you start getting into subject to and land trust type deals, then you need to select a company like Simplified Title. Martin Garcia has been doing my deals for many years. He's been a sponsor of the group for many years, and they just closed my Granbury house for me last week. And they also did the release of lien on the refinance that paid off last week. So they do a lot of stuff for us, very knowledgeable, user-friendly, and reach out to Martin. There's his contact information, and again, it's all on our webpage. We are going to be doing some videos with some of the sponsors as well. So hint, hint, sponsors that are on the call, if you want to do a video and get it on the webpage, reach out to me or to Pamela, and let's set up a time to do a video to help promote your businesses some more. Okay, if you're interested. Okay, this one here is the Think Realty membership. For all the members of the group, when you become a member, you get the benefit of the Think Realty benefits, and that is, it's kind of hard to see, but on the right side here, you got all these different vendors that provide discounts to their products and services. Highly recommend you go check them out. You can click on this link right here and go sign up. Be sure you use this code WestDFW right here. so that you get credit. It's a free membership with Think Realty to be able to take advantage of all those services. Okay. Huge benefits. You know, Sherwin-Williams, for example, is up to 50% discount on a lot of their paint and flooring products. That's a huge discount. Okay. The Home Depot Pro Services is the other one. Pro Specialty Services is the other one that I've been using quite a bit of on your accessory type things like appliances, lights, faucets, ceiling fans, you know, that kind of stuff. They're not a drywall and lumber type of service. It's their pro specialty services. So huge discounts, 15 to 20% savings over the typical Home Depot pricing. So, and again, that's all on our webpage too. So for those of you that maybe you are a company that provides services to investors, if you're on the call today, or for those on the call, if you know any companies that would be good to add to our list of sponsorship, reach out to us and let us talk to them. We'd love to get them on board. My criteria though is that, you know, have you used them and happy with them? And is it somebody you would trust your grandmother going to and working with? That's the big criteria for me. We need people that we can trust. We need people that are investor friendly, so that, you know, they contribute to our goal of being successful at helping sellers and helping you be successful in the business. So these are just some examples. We don't need just these type of people, but this is some examples of the types of folks that we could add to the business, okay? In addition to the ones we already have. So if you have anybody, reach out to myself or Pamela, and let's talk about it. By the way, I may be adding a handyman service. I've used one recently. I'm pretty impressed with what I saw. I will be following up with him to talk to him about, you know, is he interested and does he have the bandwidth, so to speak, to take on the number of members that we have in the group. But did very impressed with the work that he did. Of course, part of that is he's a retired Marine. So, you know, that explains it, right? By the way, you see my new Marine Corps flag and picture on the wall? That's my new Father's Day gift. Pretty cool, huh? I know I got everybody on mute, so I can't hear you laughing. So, okay, moving on here. Why are we here today? To talk about creating a tax-advantaged lifestyle. Pamela, if you would go ahead and unmute Kent. Kent and I have been working together for, gee whiz, probably I've been a client of Equity Trust for maybe 15 to 18 years, somewhere in that area.
Yeah.
I don't know if you know, Kent, but it's been a long time.
It's been at least 15. So yeah, you've got quite a history. You've done a lot of different deals, a lot of lending. Again, someone who's very familiar with what we do. It's one of the advantages of being part of the REIA. You get to rub shoulders with experienced people like Tim. Tim is very experienced with the self-directed IRA space and other spaces. But yeah, thank you so much for being such a long-term client, Tim.
Yep, you're welcome. And when you think it's appropriate, Kent, if there's time in today's call, I have a couple different stories of deals that I've done that may be helpful to the audience today, just to kind of give some ideas on the kinds of deals that can be done.
Absolutely.
If you think it's appropriate, just let me know.
Sure,
So,
absolutely.
But anyhow, I just to before I turn it over to Kent, we actually just completed the sale of a deal in my IRA that I really thought was going to be a long-term rental. I bought it that way with the intent of rehabbing it and renting it. And I got the thing done, and I started marketing it for rent, and everybody kept saying, I want to buy it, I want to buy it, I want to buy it. And, you know, of course, talk's cheap. You know, a lot of those people didn't come forward and prove it. And then I showed it to another tenant, and he brought his father-in-law and his fiance, and they fell in love with the house, and they said they want it. Well, then they went home, and he called me back and says, I got pre-qualified, I want to buy it. Okay. So we went ahead and we got it sold. I got I actually got my owner finance asking price retail, you know, and it appraised, which means I was under asking my owner finance price for it. But we got it appraised, and they moved in. They're just tickled to death. But so you just never know what the outcome's going to be. But it was a nice little payday in my IRA with all that tax-free money. So, but I'll go ahead and turn it over to Kent. I'll let him introduce himself and what he does. And let me stop the screen share here. And then for all of you on the call, just kick back and take a lot of notes and enjoy what he's about to share with you.
Okay, let me make sure that everyone has seen my screen, because yesterday I had a presentation. I was going on for about 15 minutes, and finally, perfect. Finally, someone said, by the way, we can't see your slides. So good that everyone can see this. Before I get started, let me thank Tim for inviting me to speak to us, DFW REI. I have an opportunity to speak to a lot of REIA groups around the country. And I can tell you that from networking with some very successful real estate investors, the one common denominator I see time and time again is successful real estate investors are part of their local REIA. And not just part of the local REIA, they're an active participant. If you want to know about the local market, no better place to get local market information than your local REIA. As Tim was talking before the start of the meeting, very impressed with what you can get just for the membership, the free website, the treasure trove of local market information that Tim has available to members. And then most importantly is the networking. Yes, we're in strange times. We're doing online networking. That's not always going to be the case. We will get back eventually and be able to network. But being part of a REIA puts you in a room of people with experience, knowledge, someone like Tim who's been doing this for decades. And what I would say about being a REIA member is when Tim, Michelle, or Pamela, when they're raising their hand and they need help with something, or you see where you could be of help to them to grow the REIA, get involved. You're going to get a lot more out of this REIA if you put more into it. So you want to be successful in real estate investing. The way to do that is being an active REIA member. And the other thing I would say from I belong to 4 REIAs myself in Northeast Ohio. All of them have various benefits. And my membership is covered just from the savings I get from all the REIA benefits, all the vendor benefits. Can't say enough about the Home Depot program, the Sherwin-Williams program. That's how I pay for my REIA membership. Is just the savings I get from those vendors. So let me jump in. This is just an overview slide of our company. I'll get into a little bit more information about Equity Trust, who we are in this space. We are the #1 self-directed IRA custodian in the country. We've been around for over 45 years, 170,000 clients now. We custody. That's last year's number. We're up to $28.6 billion in assets under custody administration. #1 for real estate. We do 1.2 million transactions a year. That's about 3,500 transactions a week. In terms of what we're going to cover today, I want to make sure that everyone has a good understanding of what a self-directed IRA is. So I'll give a definition and some examples. Today's talk is going to be high level. I want to give you some base information that we're going to build on the base with a workshop that's going to be coming up. But there are 7 different types of accounts you can do to what's referred to as a self-directed IRA. I'll talk about each of the 7 accounts. We'll talk about the taxation of the various accounts and really how to move your money from your taxable buckets to your tax-free buckets. Go over a few success stories with some of our clients so you can understand what clients are doing, how they're putting this vehicle to work for them, how they're saving for their retirement, securing their future, and what the next steps are. The next step is not to open an account. Not trying to get people to open an account. The next step is actually we have a workshop that's going to be coming up. You'll get a lot more detailed information with the workshop. This is not a workshop that we're selling. This is a workshop that's going to be free for members to attend. Free to attend the workshop. It's going to be on Thursday, July 23rd. It'll be an evening workshop from 6 to 9:30. And our speaker, John Bowens, the best educator in the business. John is an active real estate investor himself. A lot of the case studies that he'll be presenting are going to be investments and deals that he's been involved in himself. So John Bowens will be the speaker on the 23rd. As I get into the presentation, I'll give more and more information about the workshop that's going to be coming up. If you've ever been to an equity trust presentation or any of our competitors, this is a very important slide. It's a required slide. Equity trust is a passive custodian. And what that means is that we don't give out tax, legal, or financial advice. It's very important that whenever you're doing an investment, that you understand to do your own due diligence. You'll understand who you're investing with, what you're investing in. What I can tell you today is I can tell you how to invest with your retirement account, but I can't tell you what to invest in. I can't tell you to invest in 1, 2, 3, 4 Main Street, but I can tell you how to do that inside of your retirement accounts. So today is going to be for education. Understand whenever you're doing an investment, Tim would say this as well, surround yourself with knowledgeable people, people that you know, people that you can trust. CPA, attorney, tax advisor, real estate agent. You surround yourself with a success team, and a lot of those people can be found at West DFW REI Group. That's where you're going to connect with people and get to know people in the local market. So let me tell you a little bit about myself and about our company. I've been an investor since the early 80s. My first investment was back in college. I'm from Nebraska. I grew up on a farm in Nebraska. Didn't want to stay on the farm. Farming is an awful lot of work. So after college, I actually got out of Nebraska. But my first investment I did was actually a mobile home that I then rented back to some of my friends in my fraternity. From mobile home investing, that's where I got bitten by the real estate bug. Mobile home investing went on to single family, then commercial property. So I've got a portfolio, kind of diverse portfolio, several different types of assets, several different types of real estate that I've invested in. Self-employed for a lot of years. I actually ran a college sportswear business that did sportswear in 485 campuses, 36 different states. When I sold the business, the first time I'm like, okay, now what do I do? Hit the reset button. I thought I knew a lot about finances. I'd been an investor for many, many years. Never heard of a self-directed IRA. At first, I'm like, this doesn't even sound like you can actually do this. So I had to do some research myself on the company. And what I realized quickly is like, I wish I would have known about this 10, 20, 30 years ago, because the portfolio I have would be much, much larger. And I realized I could be investing in a tax advantage or even a tax-free environment. And that's what I'm going to be talking about today. So Equity Trust itself, we have over 45 years of experience in this industry. And let me tell you a little bit about how Equity Trust got started and just how important it is to be an active member of a REIA. Our founder, Dick Desage, who's widely considered to be the grandfather of self-directed IRA industry, he actually went to a REIA meeting looking for investors to do a real estate deal. And it was actually at that REIA meeting where the speaker was talking about saving for retirement. And the light bulb went off for Mr. Desage. It's like, I wonder if I can use someone's retirement account to invest in my real estate deal. So after the meeting, he actually went back, started doing the research, having his attorneys, his CPAs, looking in to see if there's anything in tax code that says you couldn't do that. And there was not. So way back in the early 80s, Mr. Dessage was the very first person to do what is now considered a self-directed IRA, using someone's IRA, 401k, to invest in real estate. So from that one customer, that one transaction, we're now 170,000 clients. We custody now 28.7 billion in assets under custody administration. I'll get into the importance of working with a custodian and what that means later in the presentation. But also know that Equity Trust started out as a traditional brokerage firm, offering stocks, bonds, and mutual funds. And then later on, we transitioned to the non-traditional, things outside of stocks, bonds, and mutual funds. We still have a brokerage company. And so with Equity Trust, people can invest in both traditional and non-traditional assets. Clients in all 50 states, of course. We are the largest in our industry. So let me get into the presentation a little bit. Write this down. This is going to be the theme I'm going to go back to again and again and again. Compounding interest in the absence of taxation. So compounding interest in the absence of taxation. What I like to do is also look at it from the real estate eyes. What if we could do our real estate investing and eliminate taxation? What that would mean. Very, very powerful, and that's really what our company is about, and showing people how to move money from your taxable buckets to your non-taxable buckets. I'll come back to this again and again, and certainly at the 23rd, we're going to be going into much greater detail about how to do some of this. Here's a good illustration of eliminating taxation from your investments. Two identical investments. The one on the left is with a non-IRA. The one on the right is if you're investing inside of an IRA. $20,000 initial investment, 20 years, 12% rate of return. Difference is year after year in a non-IRA, you're having to pay taxes year after year on whatever your income was. If you're investing inside of an IRA, all that money is going back to your account, and you're able to use that to continue to do your investments and grow your account. Now think about doing it inside of a Roth IRA. Roth IRA is a tax-free vehicle. No such thing as a tax-free vehicle. You actually just pay the taxes on the front end. And therefore, whatever your investments grow to is then completely free of ordinary income tax and capital gains. So we'll talk a lot about the Roth IRA. I always have a few assignments for you. Number one is go out and buy this book, The Power of Xero. The Power of Xero by David McKnight. Ideas on how to move your money from your taxable to your tax-free bucket. We'll talk about several of these concepts at our workshop on the 23rd, but that's a good read. It's about a $15 book on Amazon. Again, moving your money from your taxable buckets to your tax-free buckets, setting yourself up to have a 0% effective tax rate in your retirement years. And number one, I always want to ask the question, what is a self-directed IRA? If I'm at a live meeting, I get a lot of responses about, well, that means you can invest in real estate. Yes, that's what you can do with it. But understand, the term self-directed IRA, that's just an industry term. An IRA that you hold with Equity Trust is actually no different than an IRA that you hold with Fidelity, Schwab, T. Rowe Price, someone like that. The IRAs, the 401ks, they're all the same type. They're all the same account. So the difference is not in the account itself. It's in the company that holds the account. So Equity Trust, as I said before, we are a passive custodian. We specialize in the alternative asset space, meaning anything outside of stocks, bonds, and mutual funds. We still have a brokerage firm where our clients can invest in both, but we specialize in holding alternative assets. So it's really whatever you have knowledge of, whatever you have expertise in, that's what you can invest with Equity Trust. Excuse me. Give you an example. Most of our clients invest in real estate or real estate-backed notes. But I had a client, this was 5-6 years ago, out of Kentucky. They breed thoroughbred racehorses. They actually, their IRA owned part of a horse that ran in the Kentucky Derby. The horse didn't win, but how that IRA is growing is they're actually collecting the stud fees from that horse. That's what's going back into their IRA because that horse is partially owned by an IRA. Another client out of Pittsburgh is a car enthusiast. What he does to grow his account is he funds cars for small dealerships in the Pittsburgh area. He'll go to the car auction, fund the cars. He'll hold the title, and every time a car is sold out of the car lot, he charges a $500 title transfer fee. He understands cars. That's how he's growing his account. Most of our clients invest in real estate-backed notes. That's what I'm really going to focus on today. But understand with a self-directed IRA, the IRS only tells us what we cannot invest in. They don't tell you what you can invest in. It's a very small list that you cannot invest with an IRA. That's art, antiques, collectibles, alcoholic beverages, S corporations, and life insurance policies. That's the only thing that you are prohibited from investing in. Everything else, the world is open to you. So whatever you're investing in whatever you're investing in outside of your IRA, there's a very good chance you can invest in it inside of your IRA. And we'll go into much greater detail on the 23rd. I just want to introduce these concepts to you now. So as I said, there are 7 different types of accounts that you can use to do a self-directed IRA. I want to quickly just review those accounts and talk about the taxation of the accounts. And then we'll get into some case studies of what our clients are actually doing with the accounts. That's certainly more exciting. But let me make sure you have the base knowledge. John on the 23rd, we'll just do a quick overview, but he'll actually use case studies on each and every account so that you can see how people are structuring various deals. Number 1, there are individual accounts that all of us can have. Anyone can have a traditional IRA. It's been around since 1974. The traditional IRAs are tax deferred accounts. So as you put your money into the IRA, you get a tax benefit. You get it, whatever money you put into a traditional IRA, you get to reduce that from that year's ordinary income. However, with the traditional IRA, when you retire and start withdrawing from these accounts, then that income is added to your income, and you have to pay taxes based on whatever your tax rate is at the time of retirement. With a Roth IRA, and any of us can have an individual Roth IRA, you pay the taxes up front. Whatever your investment grows to is then free of taxes. So whatever you grow a Roth IRA, when you take it out in retirement, you do not pay any income tax, any ordinary income tax, any capital gains. So I'll go into much greater detail on a Roth IRA. There's a few different types of accounts that have a Roth component. We'll spend a lot of time talking about the Roth IRAs at our workshop on the 23rd. Small business plans. Most of us are familiar with 401ks that are offered through our employers. But if you're self-employed, there's some plans that you can have, the SEP, the Simple, and the Solo K. We'll go into great detail on these because with these plans, you can get a much higher contribution level into your account. The SEP and the Solo, for example, you can get up to $57,000 a year into these accounts. And if you're over the age of 50, it's $63,500. You do have to meet income requirements. The Solo in particular, very versatile account, really only for self-employed if it's you and your spouse involved in the company. The caveat is whatever retirement account you offer to yourself through your business, you have to offer to all of your employees. So I want to make sure that you're going to understand what the taxation is of these accounts. A fairly new account is the Roth 401k. Some employers don't offer it yet, but what I encourage people to do, if you don't have a Roth 401k, talk to your plan administrator. encourage them to allow employees to invest in a Roth environment. Because again, you don't get the tax deduction when you put the money in, but whatever your account grows to is then completely free of taxes in your retirement years. In the last couple of accounts, the specialty accounts, the education savings account or the Coverdale education savings account is for, just like the name says, for educational expenses, and the house savings account is the last account that we'll talk about. Again, these are the 7 accounts. Let me talk a little bit more about the taxation of these accounts. I always ask, do people want to pay taxes on the seed, or do they want to pay taxes on the crop? Seed or the crop? Now, obviously, you want to pay the taxes when it's as small as possible. But believe it or not, most Americans are not invested with a Roth IRA. They're invested in a traditional IRA, meaning that you're going to pay the taxes on the back end. So you're going to pay the taxes on the crop. We will talk to you a lot about the taxation, and consider moving your money from your taxable bucket to your tax-free bucket, and what that would do for your real estate investing. So let's first talk about traditional IRAs before we get into the client case studies. For traditional IRAs, those are going to be the plans that are offered through your employer, your 401k, 403b. If you're a federal employee, you might have a TSP, a simple IRA. These are all traditional IRAs. Again, with the traditional, you get a tax deduction now, but whatever you grow your account to, you're going to pay taxes on the back end. Any of us can have a traditional IRA, an individual traditional IRA. If you're under the age of 50, it's $6,000 a year. Over the age of 50 is $7,000. Spousal contributions, very important for individual accounts. If I work, but my spouse does not, I can open an account in my spouse's name and make contributions to my spouse's account. So understand with your individual accounts, the spousal contribution applies to these accounts. One thing to point out with the traditional IRAs, and it's all these accounts here, is you have what's called a required minimum distribution. The government hasn't collected your taxes yet on these accounts. At some point in time, they would like to start collecting the tax bill. So we're required at age 72 to start withdrawing from these accounts. And at that point in time, whatever we take out is added to our income, and we're going to pay taxes on that money. Now, that is a recent change rule for this year, and that came about in the CARES and Secure Act, where they moved it from 70 and a half to now 72 is the new required minimum distribution age date. So let's just stay on traditional just for an illustration. Again, I put my money in. I'm not paying taxes yet. My contributions are tax exempt. But at age 59 and a half, and that's a very, very important age. It's not age 62 or it's not age 65. That's Medicare. But age 59 and a half, that is when you can start taking money out of your IRAs, of your retirement plans, and you're not hit with a penalty. But at age 59 and a half, if you start taking your distributions, or whenever you start taking your distributions, that is when you have to pay the taxes on it when you're invested in a traditional IRA. So just, again, a couple of illustrations. If you take money out prior to 59 and a half, you're going to be hit with a 10% penalty, plus you're going to pay taxes on whatever you take out of your account. Post 59 and a half, then it's just added to your ordinary income. And you're going to pay taxes based on your income. Quick example, if your account grew to $1 million and after the age 59 and a half, you took out $100,000. If you had a 20% effective tax rate, then you're going to owe $20,000 in taxes. So these are all, and this is the same for all traditional IRAs, 401ks, your SEP, your simple, your individual traditional IRA. This applies to any of those types of accounts. And again, the required minimum distribution at age 72. I love talking about Roth IRAs. Roth IRAs are exciting. William Roth, the late senator from Delaware, it's named for him. He actually introduced this legislation 7 different times before it was adopted. We actually celebrate this guy's birthday at our office. His equity trust is really about how can we save our clients on taxes. And the biggest way is with a Roth IRA. Let's talk a little bit about the rules of a Roth, how to fund the Roth. So if you have an existing Roth IRA, you can transfer that IRA to equity trust, and then you can use that account to invest in real estate backed notes, whatever you have knowledge of, expertise of. So that's one way that you can fund a self-directed IRA. You can also, anyone can have their own individual Roth IRA. And just like with the traditional, under the age of 50, it's $6,000 a year. Over the age of 50 is $7,000. Understand, you can have both a traditional IRA and a Roth IRA, but you are limited on the amount of money that you can put into your individual account. $6,000 if you're under the age of 50, $7,000 if you're over the age of 50. So if I wanted to put money into a tax-deferred account, maybe $3,000 into a tax-deferred and $3,000 into a Roth, you can do that. You can have both accounts, but you're limited in the amount of money you can put in every year. Spousal contributions, very important. Just like with your traditional IRA, if I work but my spouse does not, I can open an account in my spouse's name and make contributions to both accounts. Nice thing about a Roth IRA, there are no required minimum distributions. If I don't use the account in my lifetime, it automatically transfers to my spouse. If my spouse doesn't use all the money in her lifetime, those accounts can be willed to our heirs. There have been some rule changes. In the past, it would be 100 years that you could that the Roth account would live. Now there's some new rule changes that came about just this year. When it passes to another generation, then it's a 10-year distribution period. They can still keep the money growing, keep it in the investments, use that money to do other investments in a tax sheltered environment. But now it's a 10-year when it passes to the next generation, unless it happens to pass to someone who is a minor, someone who is under the age of 18. Then that 10-year period does not start until they reach the age of maturity or the age of 18. Then from 18 to 28, that account would have to be distributed. And when it's distributed, again, this is a Roth IRA. They never pay taxes. Roth IRA, doesn't matter what the account grows to. You never pay a dime in taxes from any of that growth. So just a little bit about Roth. We're going to spend a lot of time on Roth IRAs at our workshop. Very important that you can understand once you get the money into the account and start doing your investing, whatever you grow your account to is completely free of ordinary income tax. So staying on a Roth, with a Roth IRA, you've already paid the taxes. So I think of you're writing a check to open an individual account out of your bank account. You pay the taxes now, it's in the account, it's now tax exempt. All of those returns are compounding free of taxes. You take the money out at 59.5, you do not pay any ordinary income tax, you do not pay capital gains. You're completely free of taxes from then on. Again, that power of Xero, setting yourself up to have a 0% effective tax rate in your retirement years. I'll talk a little bit about conversions in just a minute, and we'll spend a lot of time on conversions as well at our workshop. Now, some people will say, I make too much money. I don't qualify because I'm a high net worth individual. That's fantastic. These are the modified adjusted gross income limits. But what I will tell you is whatever rules the government put in place, there's usually a way to still do something. The Backdoor IRA contribution becomes so popular with high net worth individuals. Again, this is a slang term, Backdoor Roth IRA. It's actually nothing more than a conversion. Anybody can open a traditional IRA. There is no income limit on a traditional IRA. And then you are going to convert to a Roth. If you're making a same year contribution, most times your accountant would file an 8806, and that is letting the IRS know that you are taking a non-deductible IRA contribution. You're not going to pay taxes on that money. Always sit down with your accountants, but understand anybody has the ability to get money from a traditional into a Roth IRA. One thing I would tell you is that there is a 5-year seasoning rule. Whenever you convert your IRAs from a traditional to a Roth, even if you're over the age of 59 and a half, you cannot take the money out that you've converted for 5 years. It has to season. If you take the money out prior to those 5 years, then you're going to be hit with a 10% penalty and you're going to pay taxes on it. So just be aware that when you're converting IRA monies, there is a seasoning rule. The one thing I would say is with the 5-year seasoning rule, with a Roth, if you had a Roth IRA that you made one contribution to 10 years ago and didn't do anything else, then that money is already seasoned. You can start adding money to that account because it's already it's an account that's already seasoned. So we will spend quite a bit of time talking about these rules at the workshop. But what I wanted to leave you with is understand anybody at all can have a Roth IRA. There's no age limit on a Roth IRA. The one example I like to use is our founder, Dick Desich. His grandson was literally only a few hours old before he had his Roth IRA. You have to have earned income. That's the only requirement. You have to have earned income. Well, his grandson, his picture was up on our website within hours of him being born. He was paid a modeling fee. So that's, you can get very creative. But so long as you have earned income, anyone can have a Roth IRA. There is no age limit. Whether you're a newborn or someone who is over the age of 72, you can still keep on contributing to a Roth IRA so long as you have earned income. So with the Roth conversion, and again, this is something that will be a big theme of our workshop, is understanding how you can move monies from your taxable to your non-taxable. And that is through the vehicle of Roth conversions. With a Roth conversion, you're choosing to pay the taxes today and enjoy the tax-free growth from then on. Whatever your tax rate is today, that's the taxes you're going to pay. So with this example, if I had a 401k with $100,000 in it, if I wanted to convert that full $100,000 over to a Roth IRA, if I had a 20% effective tax bracket, then I would pay $20,000. But the beauty is, then that money is in a tax-free vehicle. Whatever I grow that money to is now completely free of taxes. Now, with this example, I am choosing to pay the taxes outside of the IRA. If I wanted to, I could pay the taxes inside of my IRA, and that $100,000 account would now be worth $80,000. I'd have $80,000 to invest into real estate, and all of my growth from then on would be tax-free. What I like about the IRS is there is no rule on how many times or in what denominations I can convert. So if I wanted to, I could convert in much smaller increments. Matter of fact, my spouse and I, when we first started doing conversions, we just did $10,000 that first year, just to see what the tax consequence would be. And then over the last 4 or 5 years, we've started getting larger and larger amounts converted from our old 401ks into our Roth account. The goal is, I retire in about 4.5 years. Actually, it's 228 weeks, and yes, I keep track of that every week. The goal is, by the time we retire, is to have everything converted to a Roth, and all of our investments are now growing in a tax-free environment. So that we're choosing to pay the taxes now. All of our investments are growing tax-free, and by the time we retire, we will be in a 0% effective tax bracket. We'll be talking about this quite a bit at the workshop. But in this example, you're just choosing to pay to take a smaller amount. I'm only going to convert 50. Well, that'd be a $10,000 tax bill. Again, There is no limit on the number of times you can do this throughout the year, and there is no limit on the denomination that you can do. So you can really get your money moved over in small chunks from your taxable bucket to your tax-free bucket. Then two more accounts to talk about, and then we'll get into some case studies, is the health savings account. In my mind, this is the most overlooked account there is. With the health savings account, it's the only account that lives in both worlds. You get a deduction when you put the money into the account. In other words, if I have my HSA, putting in $4,550, I get to take that off my ordinary income tax, so I'm not taxed on that money. It's growing completely tax-free. Whatever I'm invested in with my health savings account, it grows tax-free, providing I use it for medical expenses. Qualified medical expenses are any prescriptions, doctor's visits, nursing home, any qualified medical expense. I write a check and the HSA reimburses me. You have to have a high deductible health plan, and a high deductible for individual is $1,400 deductible. If you're married, it's a $2,800 deductible. What I like about the HSA, it's not a use it or lose it. I'm not using my HSA, I'm just continuing to grow it, knowing that at some point in time, I'm gonna need it if I have to go into a nursing home. I've got that money saved for me. So year after year after year, I'm growing my HSA, making my contributions every year, doing the investments with it. That money is there for peace of mind in the future. And lastly is the Coverdale Education Savings Account, the last account I want to talk about. Coverdale Education account, what I like about it is that anybody can open the account for any minor child, so anyone under the age of 18. The account does have to be managed by their parent or guardian. It's $2,000 a year is what you can put into the account. Again, it can be used to pay for any qualified education expense. That could be books, uniforms, tuition, housing, any fees. That's K through grad school. The account grows completely free of taxes, so long as it's used to fund qualified education. Again, this is another account that's free of taxes. The account, whoever the account is open for, they have until the age of 30 to use the account. If they don't use the account, they can pass it to another family member. Worst case scenario, if there's no one else to pass the account to, then a person can take a complete withdrawal from the account if need be. That money is then added to their ordinary income, and they're going to pay taxes on that. The exception is if the account was open for someone with special needs, then there is no age limit. That account can continue to be continue to grow in perpetuity. There is no age requirements if someone is of special needs. Now I want to get into some of the accounts. And I first want to talk about examples of what our clients are doing to partner accounts together. This is pretty powerful. We actually put together a report, 10 ways to partner with your IRA. And I'll tell you that when you register for the workshop that we're going to be doing on the 23rd, everyone who registers will get a copy of the report. I'm going to go over just a couple of examples today. When we get into the workshop on the 23rd, John will cover all 10 ways of partnering, and we'll give examples of what our clients are doing to partner various accounts together. But you can partner with yourself, you can partner with other IRAs that you might have, you can partner with your spouse's IRA, your LLC. You can do what's called a non-recourse loan. I'll get into that. But there are various ways of leveraging your IRA. But we'll get into all 10 at the workshop. I just want to go over a couple of examples today. Show you how some of our clients are actually using these accounts. So the first example I want to get into is a family that's investing together. And at the workshop, this family is actually going to be speaking. Jan and Brittany will be presenting some of the recent deals that they've done. Gary, the husband, they're out of Kansas City. They actually came to one of our live workshops back in 2011. Started doing real estate investing. Jan and Gary rolled over their existing accounts, Brittany was actually working for Jan. Jan is a real estate broker out of St. Louis. Sorry, I think I said Kansas City. It's out of St. Louis. Let me give you an example of what they're doing. This particular example is going to be the third different investment that they had done, and I'll get into the specifics of it. So this is a family model. They're growing 3 Roth IRAs. And again, their goal is to have tax-free growth. They wanted to get Brittany started early so she could retire early. And again, it's never too late. Jan and Gary are now retired. Brittany is in her, I can't remember if it's the second or third year. She just went back to Columbia. She is in her second or third year of law school. She has had an account with Equity Trust now for, well, since she was 14 is when they opened her account. So this is the third deal that they had actually done as a family. The first couple of deals that they had done, there wasn't enough money in the accounts to do it 100% out of the IRA. So the first couple of deals they leveraged the account with a non-recourse loan. And a non-recourse loan means that only the property is guaranteeing that account. So if something would happen, the lending institution could only attach the property. Because your IRA cannot take on debt, and you as the IRA owner cannot guarantee that. So we'll talk about non-recourse lending. We actually keep a list of non-recourse lenders on our website, and we can share that at any time. But this is the third deal that the family had done. It's important to understand that when you are investing in what's called a disqualified individual, and disqualified individual is anyone that you are related to up and down the lineal line. So that's your parents, your grandparents, yourself, your spouse, your kids, your grandkids. When you're investing with with disqualified individuals, all of your investments have to flow in and out proportionally. So all of your income, all of your expenses have to be paid proportionally. So Jan and Gary couldn't have done this investment and put 100% into Brittany's IRA, 100% of profit. It has to be done proportionally. So this particular investment, 42% of the investment came from Jan's account, 55 Gary's, 3% out of Brittany's IRA. So, oops, even the earnest money, it all has to flow proportionally. So Brittany paid 3%, Jan 42, Gary 55. And you can see the breakdowns of how they got to the $306,000. And the repairs on this particular property. All of the repairs, again, have to be paid for out of the IRA. We'll get into prohibited transactions, and what I would say is with repairs, when you're doing an IRA-owned property, you cannot do the work yourself. It has to be done by a third party. So in this particular case, and Jan and Brittany will go into this on the 23rd, they set it up with their contractors that they know that it's going to be 5 checks coming at particular benchmarks, but it's going to be paid by each IRA in proportion to what they had in the investment. They might think this is getting very difficult. There's going to be a lot of paperwork, a lot of moving parts, and we make it very easy on our platform. We're a non-depository bank. Going on to our portal and telling us where to send money. It's just like you're going to go to your bank portal and say, I need a check sent here. We can ACH, where we're going to move the money the next day. And when we ACH, there is no charge. All this can be done on your computer, on your laptop, even on your smartphone. And we'll go into the technology on the 23rd so you can see the ease of transaction. Now, Jan really likes to stage her property, and she'll talk about the importance of that in the interview that John is doing with her. You can see some of the before and after pictures. She's again a real estate agent. She stages her property. And I will say, I usually get the question, well, if I'm a real estate agent, can I represent this property? Yes, you can, but you cannot be paid a commission. You can represent the property, but you cannot take a commission if your IRA is the investor. So again, Jan is staging the property. for maximum return. She'll talk about the importance of developing the lower level and using the whole footprint of the house. But again, very, very nice, nice job on this particular property. When they sold the property for $767,000, all of the money has to flow back to those IRAs, again, staying in proportion to what the investment was. But this investment was all done out of a Roth IRA. So that almost $164,000 that flowed back to the accounts is completely free of taxes because they did it inside of Roth IRAs. And then it's wash, rinse, repeat. Jan is always looking for the next property. And she'll talk about the latest one that they had done. This was over $1 million property. She'll talk about how that was, how that deal came together and what they had done. I should say $1 million return. They didn't go into it for that much. But Jan and Brittany will be speaking on the 23rd. And that was with 3 Roth IRAs. John's going to give a case study on one investor using 11 different types of accounts, 11 different family members that have come together with various types of accounts, traditional health savings account, solo Ks, partnering 11 different accounts together for doing some very large deals. So it's not just partnering with 1 or 2 accounts. You can partner multiple accounts together to get more money put together for particular investments. We'll be talking about a case study involving 11 different accounts. So these are some pretty simple deals that we do a lot of. Understand this particular one is partnering with your IRA and your business. Your IRA and your business. And what's important here, again, because you are investing in a business that you own, everything has to flow proportionally. And the titling is very important on IRA and owned property. I'll get into that. So this particular deal, Gary out of Maple Heights, Ohio, he put 75% from his Roth, and he partnered with his LLC for 25% of the deal. As I said, titling is important. Whenever you are investing with IRA-owned property, your IRA owns that property, not yourself personally. So in this particular case, the titling has to be equity trust, custodian, FBO, stands for benefit of. And then it's Gary's IRA. And then IRA undivided interest, 75%. And then his LLC, LLC undivided interest, 25%, the name of his LLC. Now, what I would say is, yes, you can title it in your name, but I like keeping my name out of public record. We'll talk about that with the workshop. You could actually title it in the IRA account number that Equity Trust gives you, keeping your name out of public record if you choose. So again, this partnership is someone's IRA, and they partnered with their LLC. So just like with the Jan, Gary, and Brittany, all of the expenses when they did the rehab had to be paid out of each entity correctly. So Gary's IRA paid 75%, Gary's LLC paid 25%. When the investment was sold, after closing costs, 75% of the profit went back to the Roth IRA. So on this $25,875 went back to the Roth. This is now tax-free. You're not going to pay any taxes on that. The 25% that was out of Gary's business, $86,25, that goes back into his business income. He's going to pay taxes on that money. But understand, you can partner with yourself. You can partner with your business. You have to make sure that the titling is done correctly and that you work with your custodian from the beginning. Because on this particular deal, had Gary's LLC put down the earnest money, and Gary called us the next day to say, hey, I want my Roth IRA to partake in this deal. Well, now you're prohibited because you've already started the paper trail. When if his LLC did the earnest money. Everything has to be done together. You have to link hands with whoever you're investing with, jump into the pool at the same time. That's why it's important to work with your custodian. Work with us, let us know what you're doing so we can make sure that the paperwork is done correctly from the very beginning and you're able to do this, this deal properly. Another investment, this is from the same guy. And just like Tim had gotten into a deal thinking, I'm going to do a flip. The same way with Gary. He thought he was just going to do a quick flip in and out. But once he got into the numbers, I'm sorry, Gary. I'm sorry, Tim. You were going to do a buy and hold, and it ended up selling. Gary was going to do the opposite. He thought he was going to flip this, and once he got the deal done, the after repair value was so high, got the deal rented that it just made sense to keep it. But this particular deal purchased 100% out of a Roth. Purchased for 68. This is a duplex. Had 20,000 in repair. 2 units. Each unit renting for $900, and they're both rented. The ARV on this particular deal, 135 to 145. For something that really all in cost 88,000. So Gary knows that if he wanted to, he could pull the ripcord and get out of the deal pretty easily. But he's collecting $1,800 a month gross. So for now, he decided to go ahead and keep the unit. Made more sense to just grow the IRA with the monthly rents. But that, you know, again, flexibility, knowing that you have exit strategies. I'll talk about that. Know your exit strategies before you go into a deal, and have a couple of different exit strategies in mind. Very, very important. I love talking about this one. The slide's rather interesting, but real estate joint ventures. This particular deal was actually put together by John, the speaker. John's going to be using a lot of the investments that he himself is doing. But with a real estate joint venture, what's nice about this is the minority investor can take the majority of the profit. The one requirement here is, unlike when you're investing with disqualified individuals, to do a real estate joint venture, you have to be investing with people that are not disqualified from you. Let me break this one down. There's three different people that have come together. They've done a real estate joint venture agreement. This deal was put together by John. John is the $2,000 investor. The agreement was that he was going to take 50% of the profit at the exit. Person number 2 is not related to John. Matter of fact, none of these people are related to each other. They're not disqualified. Otherwise, you couldn't do a real estate joint venture. Person number 2 is putting up the majority of the money to do the deal. And the agreement is, at exit, participant number 2 is going to get 50% of the profit. Person number 3 is the rehabber. The rehabber does not have any money invested into this property. If the rehabber had money invested in the property, then he could not work on the property. So this particular business entity involves 3 individuals, and they're not disqualified from each other. The rehabber was going to get his expenses paid. In this particular case, was $10,000, and at time of closing, the rehabber was going to get $5,000 in profit. So the numbers, and John will go over several joint ventures that he's done himself. So you can see how you can take a small dollar investment and grow your account very quickly. This house was bought for $37,500. There was a $10,000 in rehab, sold for $97,500. After closing, it was $47,500 in profit. At closing, the first $5,000 goes back to the rehabber because that was their business deal. So then there was $37,500 to split, and their business agreement was that participant number 1 and participant number 2 split the profit 50-50. So they're each going to get $18,750 into their accounts. And you might ask yourself, why would someone who's going to put up so much money only take half the profit? Well, realize this particular deal, and this is an actual deal that John had done. Participant number 2 put up the money. This was a 41% ROI. This entire deal, start to finish, was 4 months. So again, wash, rinse, repeat. In real estate joint ventures are great, especially with REIA members. I see a lot of this happening where non-disqualified individuals can come together, do an agreement. put together a joint venture. And even though the person who has the smallest amount of money into the deal, well, they put it together. They found the property. They hired the rehabber. They put the deal together. That's what they're getting for their consideration. And the person is putting up most of the money, so long as whatever percentage they agree on up front, because this is a business contract. That's the beauty of a real estate joint venture. It doesn't have to be proportionate anymore. So very, very powerful investment strategy to grow those small dollar investments. John will go over several real estate joint ventures with you at the workshop on the 23rd. This is a powerful one to grow an account. If you have a small dollar account, how you can do some small dollar investing.
Hey, can I pop in there for a second on that?
Yes, please.
You know, having done a few of these deals in my IRA over the years, you know, this is huge for somebody that's just opening an IRA with equity trust and doesn't have a lot of money in it. Because like what John did right there, he only put $2,000 in that deal, and that, you know, so he didn't need to have all the money to pay the rehabber, because the rehabber agreed to fund it and he would make his profit on the other end. So John didn't have to take money out of his self-directed IRA in order to go pay the rehabber. So this is an ingenious way of putting together creative deals using your IRA when you first get started in it. And it lowers John's risk in the deal too.
Absolutely. And John loves crafting real estate joint ventures. I believe in the workshop, he'll go over 3 different ones that he's crafted, but then he'll also whiteboard. Bring questions. You're going to have questions. John spends a considerable amount of time at the workshop just crafting different deals, saying, okay, this is what you're working on. Structure it this way to get the maximum tax benefit. John will partner on a joint venture if his Roth money is deployed. He'll bring in his wife's Roth and maybe some of his traditional money, or even out-of-pocket money, just to do more real estate joint ventures. It is ingenious. It doesn't create a lot of exposure. But again, so John's $2,000 investment, the $2,000 Roth, in about a 4-month period, returned $18,750. John will talk about how he finds the deals, how he sources them, how he puts it together. And I can tell you that these people that he's working with, they're part of a local REIA. I see a lot of real estate joint ventures put together in local REIAs, because this is where you find people who are interested in real estate, who understand real estate, where you can connect to a rehabber, and even a local real estate attorney to craft your real estate joint venture. All that you can find at a local REIA. Another reason why it's so important to be part of a REIA group. Okay.
Kent, this didn't trigger UBIT either, does it?
Did not. Nope, did not. And what Tim was talking about, UBIT, and we'll talk about this on the workshop, is unrelated business income tax. And this particular deal did not trigger UBIT. But we'll talk about what UBIT is, ways that you can avoid paying UBIT. Biggest way is lending. If you're lending your IRA out, that does not create UBIT for yourself. So I will, John will get into unrelated business income tax and how to structure deals to where you're not exposed to UBIT. But then also, I don't want people to be afraid of UBIT, and John will get into that. If you can only do a deal that's leveraged with a non-recourse loan, then you're going to subject yourself to paying some UBIT, just like Jan, Gary, and Brittany did on the first couple of deals. Once they got enough money in their account, now they don't have to leverage it anymore. We'll get into that subject. Sometimes that scares people. Don't be scared of things. There are ways of crafting so that you can understand the numbers, that things aren't going to hurt you. So 3 steps, I'm not going to get into this in any great detail, but you open an account, you fund an account, then you make an investment. John will get into this in greater detail with the workshop. But again, you have to open an account with a custodian that allows you to do alternative asset investing. You fund the account, whether that's transferring an existing account to equity trust, or you can open and fund a new account. And then what do you want to invest in? Whatever you're doing outside of your IRA, there's a very, very good chance you can do inside of your IRA and do it in a more tax-advantaged environment. So why equity trust? As I said, 45 years of experience. We are the largest in our space. I want to get into the importance of being an IRS-approved custodian. But these different circles represent the different divisions of equity trust. Most people know us as equity trust. We've been around for over 45 years. But we started out as a brokerage service firm, and we still maintain equity brokerage services. Equity institutional. This is the division that deals with registered investment advisors and broker dealers. Also, if you're trading metals, gold, silver, our clients hold over $1 billion in just gold. But if you have a gold account, then you are going to be on our institutional platform. Equity Advisor Solutions. This is our Dallas office. I'm sorry, Denver office. And they offer back-end solutions for registered investment advisors, broker dealers, to offer both traditional and non-traditional assets on a single platform. So just be aware that we have several divisions, several different companies all under one roof. Most importantly is the broker services. Is if you're in between an investment with equity trust, your money doesn't have to sit in your cash account only making a money market rate. You can put money back into stocks, bonds, and mutual funds. And on our platform, we have no load fees, mutual funds. So you could put money back into traditional until you find the next deal, and then sell those positions and do your next alternative asset investing, all staying under the same platform. So very easy to move money between your traditional and your non-traditional assets. So as I said, equity trust is a custodian. Whether you choose to do business with equity trust or a competitor, I really encourage people to know who you're investing with, who's holding that fund. In this space, there are facilitators, administrators, and custodians. Only the custodian is the licensed and regulated body. So a facilitator writes business for an administrator, administrators write business for a custodian. But it's that custodian that has government oversight from Department of Labor, Internal Revenue Service. Because Equity Trust also has a brokerage firm, and we have offices in several states, we have government oversight by 7 different government agencies. And that's a good thing. You want to know who you're investing with. You want to know that they have a lot of experience, that they have financial strength behind them. So we're proud to put that out, that we are a licensed and regulated custodian. That's important. And as I'm getting closer and closer to retirement age, it's very important who I have my money with. Also, the experience level of your custodian. Equity Trust are over 400 employees. The average employee, the average account liaison, has over 5 years of experience. They've processed over 8,800 investments. 2,800 of those are going to be real estate specific. Nobody does more real estate self-directed IRA investments than Equity Trust. We are very experienced in this field. Technology and the platform. John will actually go through and demonstrate our platform. Speed of transaction. The one best way to speed your transaction is if you can do, the more you can do electronically, the better. If there's a lot of paperwork that has to be handled by human hands, it slows things down. So John will show you how you can completely complete a real estate purchase 100% on a smartphone. We don't need wet signatures when you're purchasing. When you're selling, we as the custodian do need to sign, but most everything can be done literally from your smartphone. You can be at closing and wire funds directly from your IRA to your closing agent, and they can watch the funds transfer. You can do that on a smartphone. So the technology has gotten very, very advanced. John will take you through our platform. so you understand how to use the technology to speed the transaction. Education is what Equity Trust is known for. We don't sell our education. It's actually given away. You can go onto our website. You can, just like with Tim, a treasure trove of information on the West DFW REI site. Same way with Equity Trust. We have years of experience in this field. If you go to our resources tab of our website, that's where you're going to find our upcoming events that we're doing. You're going to find webinars that we've done, white papers that we've written. If you're interested in obtaining more education, our website is a good place to start. But the best place to start is by attending, attending the workshop that we're doing on the 23rd. Again, this workshop will be online. John will take you through multiple investment types, different ways of partnering accounts, case studies that are actually going to be presented by the client themselves. Thursday, July 23rd, it'll start at 6 p.m. Central Time. In terms of the agenda, as I said, case studies. But rather than just hearing them from Equity Trust, we brought together clients, and they're going to be going over their own case studies. I think it's important that you hear from the investor themselves, how they put something together, not just what returns they're getting, but Jan will talk about how it's changed neighborhoods, how it's changed people's lives. Yes, they're making a good rate of return, but they'll talk about the impact on communities. Kevin and Cynthia, two other investors, that will talk about how they've gone in and completely rehabbed an entire neighborhood, what they're doing with their accounts, and then also how it's been set up to pass on to their kids and grandkids, and how it's going to change their lives. But not just hearing it from Equity Trust, hearing it from our clients, and that's very important. As I said, with that wheel of 10 different ways of partnering, John will go through all 10. I just went through a couple of family examples and investing with your business. John will go through case studies involving each of the 10 ways of partnering your account together. The power of the Roth, I can't stress enough. Roth and Roth conversion, getting your money into a tax-free environment where you don't have to worry about what's going to happen in the future. Our country is just madly printing money. At some point in time, I think we have I've lost count. I think it's $23 trillion in debt now. It's going up exponentially. At some point in time, taxes are going to go up as well. I want to get myself into an environment where I don't have to worry about what the tax rate is in the future. And that's where the power of the Roth and the Roth conversion plays in to my retirement plan. And again, I only went through a couple of examples, but at the workshop, we'll be going through multiple examples. Whatever your strategy you might have in mind, buy and hold, fix and flip, lease option, sell or finance. John will go through case studies involving multiple different types of real estate investing. Technology, can't stress it enough. How rapidly technology has improved and gotten better. And we're going to be going through our entire platform so you can understand the ease of process and how to speed the process for yourself when you're doing these investments. As I said, small dollar investing, I really enjoy those. The joint ventures, John will use several of his own joint ventures as case studies, but also other small dollar investing, doing a wrap. We've got a case study with one person who's never contributed more than $500 into a Roth IRA. After 1 year, had that account to $36,000. After 3 years, had the account to $64,000. And she'll be going through her first 5 deals on how she grew that account. But again, small dollar investing, I think is huge, especially if you're just starting out, you're young, you're just opening your account. There is a lot of different investment strategies. And we'll be going through several of them on the 23rd. Tim, I know you're good with this one. Private lending, using your IRA, lending it out, putting deals together. Can I ask you, do you have a couple of deals that you've done recently? Tell me about some of the deals that you've recently done with your IRA.
Well, the one I mentioned earlier was just the end of 2019. Sold it, I think, the first part of 2020, where I bought that house. I was intending to keep it as a rental property. I split it between a traditional and a Roth because I didn't have enough in the Roth for this particular house to be able to buy it and do the rehab. So Kent, you kind of alluded to this earlier. If they are using multiple accounts, you have to split them, in some percentage. I used a 75-25 percentage. So all of the purchase was 75% traditional, 25% Roth. And then the expenses, every time I wrote a check for expenses, it had to be split 75-25. And then when I sold it, the profits had to go back. So the payoff had to go back 75-25 when it was done. So that was the most recent one. One of the lending deals I did in my IRA turned out to be a property deal because they ended up having to foreclose or giving it to me in deed in lieu of foreclosure. So what happened there was they paid cash for the house, so it was free and clear, and they wanted rehab money. So I lent them rehab money out of my traditional IRA. This was a couple years ago. Lent them the money out of the traditional, and he ran out of money and discovered that he had a major roof problem, so he needed more money for a roof. So I lent him more money, but out of my Roth. So now I've got two loans on the house, and he's got the house on the market. It's not selling. I tried to give him some guidance on things to do to get it sold because it wasn't up to my standards. But anyhow, we were overdue. We extended it once. We got to a second. The second extension came due, or the due date came due, and he still hadn't sold it. And I just sent him an email and said, Bill, we need to talk about this and what we're going to do because your due date's coming up. And he just says, I'll just deed it back to you. No argument. I mean, I wasn't asking to do that. I wanted to have a conversation, but he just deeded it back to me. So now what wasn't a single loan, I now own the house, and it needed some more work. So I spent a couple more $1,000. Again, now I have two loans against it though. So I had to split the expenses, and then I got it sold on owner finance. So I sold it on owner finance, and I think I got $15,000 down for a down payment. So that got split, going 75-25 back into the traditional and the Roth. And then they paid payments for like 5 years on the house at 9%. Again, every monthly payment is split 75-25 back into the account, the deposits. And then they finally refinanced it and paid me off. And I don't even know what the return on investment was, but it was through the roof.
Sure. And what I would say, when Tim was telling the story, what I was hearing is, number one, Tim went in with the idea of helping an individual. Certainly helped the person who ultimately couldn't get rid of the property, so he deeded the property back. And then when he sold the property on owner finance, again, he was helping another person who couldn't get in to a traditional financing. So going into a deal with the thought of how am I helping this person, you would be surprised how well your investments do that. And anyone who knows Tim knows that Tim is trying to help not just the people he's investing with, but the community as well. As one of the reasons why he has the REIA is to help other people learn about real estate investing. So do well and do good. I think that's a motto that Tim definitely exemplifies, especially in that transaction. Nice job. You went in and you helped a couple of individuals. So great job.
Yeah, I love telling that story because, and you got the very short version of it, but yeah, it did help a lot of people. Both the original borrower and the buyer from me was extremely happy. And,
Good.
Yeah, it was a good deal. Good story.
And as I like to say, in the real estate world, it's a small world. Everyone is connected to everyone else. We want to do well with the people that we're investing with, the people that we are putting into our properties, but we don't want to screw people over ever, because that does come back to it's always going to come back to you eventually. So do well and do good. So fantastic. Thank you, Tim. So that's going to be a little bit about the agenda. When you register and when you attend, again, we reward people not just for registering, but also participating. So when you register, you're going to get the 10 ways to partner. You'll get that report. When you attend the workshop, you'll get 2 other reports. One is 100 investment options. So those people who attend the workshop, they're rewarded for attending. 100 investment options. This is a report that we put together with case studies on various investment options. And then lastly is a video on conducting your first real estate transaction. This is a video that we did with a client, going through step by step, so you'll understand how to do your first investment. You might say, well, what does it cost? I've already told you, this is a free workshop. There is no more education to buy. There is no more boot camp to buy. We're not trying to sell any other education. We hope that you open an account. If you don't, at least get the education. If you're already a client of Equity Trust, come to the workshop anyway. Get more education. If you're with a competitor, competitors don't offer the education that Equity Trust does. By all means, come and see what else you can do with your account. And Tim is going to be sending out an email. It's going to have the registration link for West DFW REI. You can also send me an email, and I'll send out Tim's link as well. If you have any questions, by all means, send me an email. If you'd like to register, again, Tim will send out an email. If you didn't get Tim's email, you can send me an email, and I'll send Tim's link as well. But Tim, that's all I had. Let me know if there's. I've got a couple minutes for questions. I know I probably went over time. I apologize, but let me know if anyone has any questions.
We're good time-wise, Kent. So we got a few minutes. Does anybody else have any questions? I have a couple, but I can wait till after others ask.
Oh, I saw one question come up on asset protection. Are we going to cover asset protection? Yes, we do. And I understand that when you're investing with a qualified retirement account, that account has asset protection around it. But we will get into asset protection in the workshop. Some people will invest within an LLC. By all means, we'll get into that as well. Just another layer of asset protection. But that's very important when you're investing with a IRA or a qualified retirement plan, is you do have a layer of asset protection because of that type of account.
Is John going to go into trust too?
Oh, yes. Real estate trust. Your IRA owning a trust and investing out of a trust. Again, great for asset protection and even anonymity. Your property can be titled in the name of the trust. Again, asset protection, anonymity. It's very, very hard to pierce an IRA or a trust. You have to prove fraud or negligence. Obviously we don't always tell your investors, protect yourself with insurance. You're not going to go into a deal with the thought of having fraud or negligence. But if you wrap it around a trust, you're going to have tremendous asset protection.
I didn't mention it earlier, but the deal I mentioned that I bought at the end of 2019 and sold in 2020, I put that in a land trust.
Oh, good.
Using my IRA. So yeah, there's certain steps you have to take and, you know, have all the right documentation and stuff. But yeah, that's part of the anonymity asset protection strategy. So.
Yeah, good, good. And again, I go back to the importance of being part of a REIA. Tim has done land trust before. You might be a new investor. You need someone to show you the ropes. You're rubbing shoulders with people who have done this before, who have done multiple deals before. That's the importance of being an active REIA member, is rubbing shoulders with, you're networking with people who have the experience that you don't yet. Be an active REIA participant.
So I don't see any other questions, so I have a couple for you.
Sure.
If I heard you correctly, I think I heard you say that with a Roth, there is no required minimum withdrawal. Is that correct?
That is correct. You do not have a required minimum distribution. So if I don't use the account, it passes to my spouse, avoids probate, there is no taxes. My spouse can continue to grow the account, keep the investments in there. When it passes to another generation, then that person will then have 10 years to distribute the account, unless that person is a minor, the person who we're going to leave the account to. Then their 10-year period does not start for 10 years. So myself, I don't have to use the Roth. I don't have any required minimum distributions. My spouse will not have required minimum distributions. But when we leave the account to another generation, then at that point in time, that person will have to distribute the account within 10 years. That is a new rule change that came about from the Secure Act that was passed in February. So that's a new rule change.
Okay. And then my next question regarding Roth, I think I heard you say that you can always contribute to the Roth and well, regardless of age or your income. Is that correct?
Correct. You have to have earned income. So right. Think W-2 income. So long as you have earned income, if you're a real estate agent, real estate broker, if you have Schedule C income, that also qualifies. If you're self-employed, as long as you're paying yourself, you have earned income. So that's the requirement. There is no age limit. If you're working into 70, 72, you can still be contributing to a Roth IRA. If you open an account for a minor, so long as that minor has earned income. What I see a lot of times with real estate agents, real estate brokers, you may see a billboard that has someone's family picture. Well, pay that family member a modeling fee. You've now created earned income for that person. They're going to pay taxes on it, but you're creating earned income for that individual. They can now have a Roth IRA. Start piecing deals together for those minor children. The Jan, Gary, and Brittany example that I used, they started Brittany's IRA when she was 14. I know it's well over 100,000 that she has now. I think she's 22. But during the presentation, Brittany is one of the presenters. Very, very gifted individual, 22 years old, understands real estate. Her mom and her have been doing various deals together. But she started when she was at 14. So long as you have earned income, you can have a Roth.
Okay. So if someone had funds, retirement funds in another account somewhere and they wanted to roll it over, such as a 401k, roll it over to equity trust, how long does that process take?
Sure. It really depends on where your account is now. Most of the large brokerage firms, Fidelity, Schwab, T. Rowe Price, they're very quick. It might take 2 weeks. But that's the importance of having an account open and funded because it can take up to 6 weeks. It depends on where your money is now. It can take as long as 6 weeks. So even if you just open an account with $500, which happens to be the minimum to open an account, you at least have money in the account to do an earnest money deposit and buy yourself time. You never want to go out and find the investment and then call us and say, hey, I've got this great investment, but I need to pull the trigger right now. Because unless you have an account opened and funded, it's going to take time to move those funds over. There's one other thing I was going to mention. I lost my train of thought. When you're rolling funds over from an existing custodian to equity trust, does not create a taxable event, so long as you're staying in the same type of account. In other words, if it's traditional, as long as you can you roll it over to us as a traditional, there's no tax consequence. For whatever reason, many people will say, send me the check and I'll send the check to equity trust. Well, you've now created another 2 weeks delay because when you get that check, then you have to send it to equity trust. Equity trust has to deposit it. Yes, we wait 5 business days before those funds are available. So we can wire transfer. And when you're transferring funds like that, we actually pay the wire transfer. That moves those funds quicker. So just be aware, if you need to move funds from your existing custodian to us, we can do that just with a wire transfer and speed up the transaction. The other thing, Tim, is the age 59.5 is very important. If you are employed, you have a 401k with your existing employer. It's pretty rare that prior to the age 59.5 that you can roll that account over if you're still employed. We have to get them on the line to say, will you allow an in-service rollover? In-service rollover, meaning that you're still employed there, but you can take that account and roll it to another custodian. After the age of 59.5, that's when almost anybody can take their account, even if they're still employed, and roll it over to another custodian. So 59.5, government employees, usually at the age of 50 or 20 years of service, then you're able to roll those accounts over to another custodian, even if you're still employed there.
Okay. Thank you. One last question for me. Rolling traditional, or would you call it conversion of traditional to a Roth? Any special considerations for me on when I should do it or how much I should do it, or should I just do it?
Sure. Now we can advise, but getting your money from a traditional to a tax-free, you're choosing to pay whatever your ordinary income tax is today, knowing that once you've gotten those taxes out of the way, whatever you're investing in, whatever your growth is now going to be free of taxes for you forever. You can convert in small increments. If you can't afford or don't want to convert a $100,000 account because of the tax consequence, you can convert in a $10,000 or $1,000 increment. It's whatever makes sense to you. You might want to sit down with your tax advisor to say, well, what makes sense? And as I said, we started with just $10,000 just to see what the tax consequence would be that year, and have now started doing larger and larger increments with the idea of being tax-free by the time we retire, living in that 0% effective tax rate by the time we retire. Very possible. Make sure you pick up that book, The Power of Xero. Read that. It's about 130 pages. Get it before the workshop. We're going to reference it several times in the workshop. But talking about how to get people at a 0% effective tax bracket, working and investing out of a Roth IRA, doing conversions, and again, putting all of your money to work for you, compounding your interest in the absence of taxation.
Okay. So that was my last question. Does anybody else have any questions for Kent while we still have him here? Anyone? Unmute yourself, please.
And if not, Tim, I want to say again, thank you for allowing me time today. Make sure that everyone is an active participant in West DFW REI group. Tim's going to send out an email that's going to have information to register for the workshop on the 23rd. The workshop's about 3.5 hours. There's a lot of information to go through. Those that register will get the download of the, those that register and attend will get the download of the education afterwards. So even if you have to drop off for any reason, you're going to get the download afterwards, but you're also going to get the free downloads that I talked about as well.
Yeah, and I'm going to show them where to register here in just a second.
Excellent, excellent.
Okay, I'm going to take the screen share back. So just so you know, just when you come back to the group page, many of you probably already have received the email about the event, but you just come to click to the home page, come to the calendar of events, come right down here to 23 July, there it is, and just click there to go register. That's all you have to do. Again, you'll be receiving email for that event as well. And then let me just flip back over here to my presentation for my closing comments. Ken, I want to thank you before I forget that, but I want to thank you for the presentation. You know, every time I see this, which has been many times over the years, I'm either learning something new or there's a refresher of something that I say, oh, I forgot about that, you know? So, yeah, thank you very much. It's always good. So just to kind of wrap things up so we can close this out for today. Upcoming events, you know, this is, all of our events are posted on the calendar, and all you have to do is just go to the group page and then click on calendar of events, and you'll see all of the events that are coming up. We have several things coming up next week, as well as the week after. So anything that we have planned is on this calendar. So please be sure to go back and look at that frequently. And we will also send you email reminders of that, okay? Just kind of wrap things up for those of you that are not members yet, and even the new members, just if you haven't seen it, we reduced the membership prices effective 1 June. So now it's super cheap. It was cheap before, but it's really cheap now to become a member and stay plugged in and take advantage of all the things that Kent and I have been talking about. There's just so many benefits to being a REIA club member. And I like to refer to it as your watering hole. It's your REIA club watering hole. You come to the REIA clubs to, yes, you can attend the meetings without being a member, but being a member, you just gain so much more. You know, you can rub elbows, you get moral support. For those of you on the call that still looking for your first deal, you know, positive mental attitude and support is important to you, because if you go home to your family and you're trying to tell them that I'm going to learn how to buy houses with no money, and they're going to say, yeah, right, get out of here, don't waste your time or money. Well, I'm here to tell you, you can buy houses with no money, and that's what I'm teaching, and that's how I really built my business. And 20 years ago is how I really started it, where a lot of people start wholesaling, you know, which is a great way to do it. I really started with subject to deals, and I did that. I still do it today. And we did one in January of this year. So I think we're going to be getting very busy with the future. That's not any kind of promise by no means, because I can't control it, but I think we're going to see a ton of pre-foreclosures coming. Anyhow, just moving on here, the prices, again, you can click, you'll get this presentation. You can click on the option here and see all the different benefits and pricing, and you just need to spend some time on it if you're not already a member. Okay, what's your real cost of being a member? Like I said, all your monthly meetings are free, so things like this are always going to be free to you the first Saturday of every month. You know, it's only an investment of $150 for 12 months. If you attend the meetings, you know, register and attend, you earn $5 a month credit. So you get $60 a year if you attend the meetings, you know, so that's making your cost only $90 a year. It's only $7.50 a month. I don't know how you can say no to that when you consider all of what you're getting. So again, there's the list of the benefits that you receive. So services I offer, I do real flow consulting. For those of you that know me, I'm a big systems guy, and real flow to me is just the smartest thing since sliced bread when it comes to having a system to manage your real estate investing business. I offer mentoring, which is very customizable, whether it's an hourly thing or a weekly or a monthly or by deal type of thing. I'm available for that. Virtual online mentoring, I've been tossing that around. With Zoom, it makes it quite a bit easier than to try and get together physically. If anybody's interested in talking about that, just reach out to me or Pamela and get on my calendar so we can talk about that. I also do some consulting on business setup and organizational consulting. I plan my exit strategy. A lot of people either don't have a choice, they're fired or unemployed, laid off. But other people say, oh, I hear about this get rich quick scheme and I can go become a real estate investor and get wealthy overnight. Doesn't work that way for most. Not saying it can't, but it's not likely. But I planned my exit strategy. I gave a 1-year written notice that I was resigning. And I still actually have that framed on my office wall from when I submitted that in July of 2005, that I was resigning in July of 2006. And people actually said, oh, they're not going to let you do that, because I worked out at Lockheed and I had all these high secret, top secret clearances and special program access and stuff. And they said, oh, they're not going to let you do that. They're going to escort you out of the building. Do you think at that time, knowing that could potentially happen, do you think I was ready to go at that point anyhow? I really was. So it didn't matter to me, but for some reason they liked me and they let me stay a year. And on 31 July 2006, I resigned and I walked out the door and have been full-time ever since. I can help you, I can guide you and tell you what I did to plan for that, and setting up your business to get organized. It's easy to get disorganized and easy to not stay focused on doing deals and growing your business. So we can talk about some of those things. I'm also available for joint venture deals. You can click on this link right here in the presentation and submit your deal to me. It goes to one of my many websites, but just put comments in there who you are and that you want a joint venture, and we can go work together on those deals. Happy to do that. You can again call the office and we can talk about just what that joint venture partnership looks like. But like Ken's been saying, that's one of the benefits of hanging out with like-minded people in a REIA group is you can learn a lot and you know who to trust and who not to trust and so forth. So reach out to me if we can help you in that way. This is a new benefit within the last 4 or 5 months, and that is all members of the group, all the paid members of the group get 6 months free of the Real Estate IQ Deal Analysis Suite. That includes a deal analyzer tool, a repair estimator tool, and 6 months free of comps, of MLS comps, which is absolutely necessary for you and your business to be successful. Remember back at the beginning of the presentation, I said one of our goals is to give you the tools and support you need to be successful in this business. Comps is one of the biggest things you're going to need to be successful and not use any of these free services out there that they provide estimated values in, and they try and lead you to believe that's what the true value of the house is. Zillow, eAppraisal, Realtor.com, Redfin, they give you numbers, but they give you estimates. They're not real numbers. You get access to these tools for 6 months as a member of the group. So this is a sweet deal. You need to take advantage of it. If a lot of members don't know about it, so that's why I keep promoting it. It's 6 months free. Those folks, all you got to do is submit your information here. Your member number can be found. It's required to sign up. Your 4-digit member number can be found in your member profile where you log in at for the West DFW REI group. So be sure you go register for that and get your 6 months free, okay? There is if you like what you see there is a paid upgrade for some additional services where you can receive all kinds of leads 6 days a week, you know, and who doesn't need more leads, right? So with these leads, you get pre-foreclosure, you get probate, you get judgments, liens, absentee. I mean, you get all kinds of stuff that are fresh data from public records. They put it into a nice list by county. They tell you the kind of leads you can go market to these particular leads. These come to you, they're sent to you every day, 6 days a week, as part of this special offer that they give you as a member of the group. Be sure you use the Be sure you use this code right here, West DFW REI, to get this 25% discount for life. Very important. Use that code so you get that 25% discount for life. Okay, that's a part of your membership deal here with the West DFW. So RealFlow, you have 2 options here. There's a 60-day free trial to go see what it's like. I'm going to be teaching a RealFlow workshop again. It's always a big hit. But you also, as a member of this group, nowhere else on the planet will you find the offer that we provide right here for the group members. It is a deeply discounted rate that you get, plus there's several bonuses. Again, we are the only group in the U.S. that received this deal because I've been a member of RealFlow for so long, and I beat them up bad about, hey, you got to help my membership. So this is a huge benefit to you, a huge savings to you. I won't go into it now and delay everybody, but I'd suggest when you get this presentation, go in, and it's also on the webpage in the products list area. Go read the products list page and you'll see all the details right there as well. And during the COVID-19 situation, I may be able to get you some additional bonuses. It's all about timing of when you step up and say you want to join. So you have to reach out to me and let me know, but I may be able to get you some additional free courses that RealFlow offers as part of your membership with coming through the group here. So be sure you go look at it. Let me know if you're interested. I will go find out if they still will give me that course for you, because it is a personal thing, my relationship with them, since I've been working with them for 10 years. I've been on RealFlow for over 10 years. I'm one of their more senior people. And also because of that, I sit on a pro users council with them to help them improve the tool even more. So I have a little bit of clout. I don't have as much clout as I'd like to think I have, but I do have some clout with them to hopefully be able to get you all of these courses. So you need to take action on this though, and let me know if you're interested, okay? And you can go get signed up right here and get started with it. If you get signed up, I will tell you, I will go fight for you and get you those courses. I just can't tell you if it's going to be 2 or all of them. Okay. All right. So that wraps it up for me. I just want to say thanks again to everybody for attending the call and taking the time. This is for long-term investing. You couldn't be at a better place, in my opinion, learning about what you learned today. And of course, the follow-on is July 23rd. You really need to get registered for that workshop. Don't forget, you get the free downloads as soon as you register. And the book, go buy that book and get the short read taken care of before the event. But that event is going to knock, Power of Xero. Thanks, Kent. That is going to knock your socks off when you come out of that event and understand what you have a hold of and how it can accelerate your financial wealth using these tax-free strategies. So whether it's lending money, I've borrowed a lot of money out of other investor IRAs, so they've benefited from me very well, very, very much, as well as I've lent money from my IRA to investors. And I don't do anything outside of real estate investing. So I'm either buying houses with it or I'm lending or borrowing. I don't go off and do any other kind of strange businesses, that you can do through the self-directed IRAs. But I just think it's a huge opportunity. Now, keep in mind, you can't use your IRA if you're expecting to if you need 10,000 cash to go buy a new car with. You can't be doing those kind of things. So just remember, these are strategies to help build your IRA account so that you will have a bigger nesting egg towards retirement. So just keep that in mind. You have to use it for the right types of deals. So, but again, I just think you couldn't have been at a better place today. My hat's off to you for making the commitment to register and attend. And, with that, I'm going to just open it up to everybody, and you can say any last parting comments, any last questions for Kent or myself. Let's see, I tried to click unmute everybody, and why is people still muted?
You have to approve. Each person has to approve the unmute.
Oh, I did make that setting change, didn't I? Okay.
Technology.
Okay. So anyhow, anybody have any last parting comments? You can also have applause. You can click your little button down in the bottom there and say, thank you, thank you, thank you, all that kind of stuff. But anyhow, that wraps it up for me. Anybody else?
Hey, Tim, I just started using RealFlow myself, and I'll tell you what, amazing how they went through and scored every property in the U.S. as to that property's sellability. There's a wealth of information that Greg and his team have put in tens of thousands of property across the U.S. And just being able to look at your own area that you want to invest in, because I like investing in my own backyard. To say, okay, what houses might be most likely to be up for sale, so I can start marketing to those houses even before they come on the market, and get some of those deals before they go on the market.
Yep.
I'm amazed.
Yep. So do you want me to add you to my workshop invitation when I do it?
I actually, I'm doing some work with Greg. They're actually located very close to our office. I didn't even realize that until I saw Greg at a Than Merrill event.
Okay. Yep. Do you want an invitation to my workshop if I do it?
Please. Yes, please. Absolutely.
All right. Yeah, like I said, I've been on it 10 plus years, and there's a lot of things in there that I don't even use, but there's a whole lot I do, and I've learned a lot of little tips and tricks and so forth. And the other thing is I'm excited about is they're going to be releasing all new website platforms here in the next couple of weeks, which is long overdue, but they're going to be much more powerful, easier to edit. They're going to be WordPress-based sites, and just powerful tools. So
I know John Bowens, who is a very active real estate investor. Once he saw the platform, had it demonstrated, he was in the middle of doing some deals. He's like, "Oh, let me go in and evaluate this property with these tools," and it saved him a lot of money using it on his very first deal that he did. And now it's just a standard to go through and evaluate some of those properties that he's looking at with the RealFlow platform. So it's a very powerful tool available.
Yep. Well, the other thing I like about it is it's one big system. Everything ties in together. probably their weakest point in the whole system is comps, but they have, you can still use your own local comps tools, and they have an option for comps, but it's one that we don't particularly care for. So, but we don't really need it with our fast CMA tool. So, okay, anybody else? Anybody else got any comments?
Thanks for putting this together.
Yes, sir. You're welcome. Thanks for coming. Anybody else? Okay. Well, listen, I'm going to go ahead and let everybody go. Naturally, I'm going to tell you, be safe out there. Crazy, crazy world we live in today. Between the COVID situation and all the protest stuff going on, be safe, do the right thing, do what's right for you, and protect yourself and your family and others. And we look forward to seeing you again soon and working together. And if we can do anything for you, be sure to reach out to myself or Pamela, and have a great day. Signing off.
Thank you.
Appreciate it. Take care.